Should you be investing in stock? That's probably the biggest question that you want to ask yourself before you commit. How well can you handle your emotion? And this is very important because when the stock market takes a hit, and I'm talking about depending on how big a portfolio you have, we're talking about several percent of drop. That could be anywhere from a couple hundred to 1,000, even tens of $1,000. You could be losing tens of $1,000s, and if you panic and you are so scared of losing that money, then investing in stock is not for you. The second thing is, do you have emergency fund? Emergency fund is important because you don't want to touch your investment to cover for whatever emergency happened in your life, whether that's medical or repair for your car or your house, whatever it is. You want to make sure you have emergency fund because if you were to touch the investment in your portfolio, there are a couple things that could happen. So you could be paying a higher tax and or penalty for your withdrawal. In a brokerage account, you have a different tax rate depending on how long you had the stock in your account. Anything above 1 year is considered long term. Anything below 1 year is a short term. So if you have a short term withdrawal, then they're gonna tax you as a regular income percentage. And if you have a Roth IRA, they will tax you and penalize you for early withdrawal, which is a double whammy. So you definitely don't want to do Roth IRA. There is an exception though. If you had held the account for 5 years, then you could make the withdrawal of the amount of money that you had deposited. So let's say you have the Roth IRA for 10 years and you have deposited $70,000. That initial $70,000 you deposit, you could withdraw them without penalty and without paying tax on them. But you don't want to do that because any withdrawal for any of your investment account is gonna hurt you. It's gonna delay the goal of your financial amount, whatever that may be, and it's just gonna slow down your compound interest. So withdrawal in general in investment is a very poor decision. That's why you want to have emergency fund. The last option is due diligence. You want to make sure you understand what you're investing. I'm not saying you have to understand in and out the complete whole 9 yards of this company, but you should understand what the company is doing, how they are making money, how much they are making money, and what their future looks like. You want to do a basic due diligence of the company you want to invest. You don't want to just invest in the company that everyone talks about and you have absolutely no idea what it is, because that's a very risky move to do. Just because it's doing well for 1 or 2 days or maybe a week, it's not going to be a long-term safe investment. So you have to do your due diligence. If there's anything that I missed out, comment below, share your wisdom with everybody. If you guys have any questions, comment below, and I'll see you guys next time.